Hello, everyone. This is Phil at the Laptop Trader. Welcome. This is going to be our April 2023 monthly update and video. This is going to be a fairly short video, and this is going to be just a couple of topics. This is my just quick disclaimer. I'm just here to share my experience of and give back to the stock investing and trading community one video at a time. So welcome again. There's my email contact. And then a caution, okay? So most stock traders lose money. Please protect yourself at all times. And nothing discussed is trading or investing advice. So this channel is about being your own investor, your own trader. If you can't handle that, please seek qualified help if you need help investing your money. Okay? That's that. So two topics for this month. Just want to say happy Easter to everybody. Hopefully everybody had a good Friday. I did. And looking forward to Easter, which in my opinion is the most important Christian holiday of the year. I don't believe Christmas is. I believe Easter is the most important Christian holiday. So good luck in investing. Let's get to it. Let's review quickly just a couple slides to review the 4 stages, which I do in every video, to remind you of kind of my premise for getting into and out of any market. So this last month I kind of talked about emotions and charts and how you can kind of read that. So we're going to continue our discussion of reading the charts and the emotions related to that and some of the patterns from last month. If you can internalize this concept, it should help you. Really, it's really helped me and helping me to make some better decisions, I think. So we only have 7 charts this month. I'm going to give you guys some homework at the end. And then 2, we'll just talk about being responsible at all times for your own actions and choices. Because if you won't, then I think financial success and happiness will be highly unlikely. In other words, blaming other people for your lack of success is probably not going to help you. And that's, in my opinion, that's the truth. So it's not Mr. Market's fault. You're not growing your capital or making all the money you want. It's really your fault. And until I took my own finances seriously and took my own financial responsibility, even though I earned a pretty good income, I didn't really feel and didn't really experience a lot of, financial success. But when I took responsibility and kind of really took it seriously, I started to experience some short-term and long-term financial goals. I started meeting some of my financial goals when I did that. So let's move forward. Again, we'll just a quick review of the different stages of price action. You know, would just be a simple line chart of price with a one simple moving average going through that. The green line is a simple moving average, and you can see the different stages 1, 2, 3, and 4. So 1 would be a sideways kind of indifferent stage, 2 would be an uptrend or the greed stage, 3 would be a sideways stage also, but more of a market maturity or distribution stage, and then 4 is a downtrend and normally called the stage of fear. And then usually stage 1 repeats and the company, product, or service regains some momentum to the upside, or many times that product, service, or business goes out of business. So either thing can happen there in these stages. Again, this is just a quick thing I created, just showing the different names you may see in the media about how these stages are labeled. So that's really all that's for. So let's get to a daily chart over the last year. Okay, so it's the daily 1-year chart of the S&P 500 ETF SPY. So this is probably the most widely followed ETF or market ETF. So you can see on the left, over the last year, we opened and closed here around the 440 level. And a year later, we are sitting at 409. So over this last year, it's essentially gone down in price a little bit. And if you look at the near term, since October, it's kind of went up slightly. But overall, we've been in the sideways trend from from here up, down, and up, down, and then up again. So we're just kind of in that general 400 price range between about 420 and 380. So in the middle of that is 400. So right now, it's just a sideways market. So not much you can do with that as far as if you're looking for a directional view on the market. We're sideways at this time. And as far as a comment on this banking crisis, that was right here, I believe. This selling was right here. So it looks like the markets have kind of absorbed that bad news. One thing I will say about this banking crisis is it looks like the market is trying to absorb that or just almost ignore that to a certain degree overall. But I think that could really affect the economy. So I look at the stock market separately than the overall economy. Some people disagree with that and say, no, the stock market is the economy. I differ on that. So I think we have better stock markets ahead, but I think we may have a worsening economy ahead. So when we look at this weekly chart, this is the same ETF, only with weekly price action over the last 2 years. You can see here it opened and closed. Again, around that 420 level, and 2 years later we're at 409. So again, this just reinforces the fact that we're in this up and down sideways market over the last 2 years. Now let's take a look at the monthly S&P market ETF. Now over the 5-year period, we're here 5 years ago, we were at, I don't know, maybe 275, give or take. And 5 years later, we're at 409, okay? Making a high of, I think it was 470, 480. So over the 5-year period, if you bought and held this ETF or bought the market, you're up. And so that's really good news for long-term investors. That even through all this volatility of COVID and this bear market of 2022 going into 2023, buying and holding the overall market is still a pretty good idea. But again, here would be March. This would be the March month. And even though we had that awful banking news about the banking markets, we still closed green with a bottoming tail. So again, the market is just kind of, I think, absorbing that news like it's not going to affect everybody in the market. Although again, I think it could affect the economy. So we're starting off April right here towards the top of that. And again, we have a slight uptrend since October, November of last year. So in the short term, it looks like we're going up to sideways. And in the very long term, it looks like we're still kind of heading up. So I think that's pretty good news for the market overall. Now, short term, things can change pretty quickly. So you just have to be nimble. If you're going to invest in individual stocks, I wanted to throw this one in there for you guys. This is Dow Chemical, symbol DOW, and this is a 1-year chart, daily chart. And you can just kind of see it doesn't look like there's much of a pattern in this other than the fact that on the left we closed here around maybe 62, 63, and a year later we're at 54.82. So down over the last year for Dow Chemical. And I just want to try to get you guys to think about some of the emotions on these shorter time frames, because many traders get confused that how could the market be going up or sideways over the last year or two, and I own Dow Chemical and Dow Chemical's down over the last year. Well, that can happen. Some stocks go up and some stocks go down depending on other factors. So some of those factors can include profitability, earnings, dividends, how the market generally views that company, and any other short-term news. So this is this would be kind of a hard one to trade, because on the left you've got kind of a topping pattern over here where you got this topping tail, you got another attempt for price to go higher and then it's rejected. It attempts a third time to go higher, it's rejected. It attempts a fourth time to go higher and then it just sells off. So that's a power move down, sideways, and basically sideways from this point here all the way across the chart. We had a little breakout attempt here that went up, pulled back, tried to break out, and then failed again. So there is still quite a bit of selling pressure in Dow Chemical. And even though we had this bottoming pattern where you had kind of this inverse head and shoulders, this left shoulder, kind of a head, and then kind of a right shoulder, and it broke out, that has been rejected recently over the last 2 or 3 weeks here. So this looked good, right in here. This looked like we had this bottoming pattern, sideways, breakout, sideways, and it should have went up, but it didn't. So we have to be prepared for that as investors and traders, that either keeping a small position size if it's something you want to own, or using stop losses in case that happens to you, so that you could have got stopped out maybe under this level here, under maybe 55 or so, because it just retraced all the way back down to this previous support area. Now, one thing I want to highlight too about this kind of V bottom is when you see that, that's kind of a power move down and a power move up. And it can happen either way too. It can happen when stocks move up. And you can kind of see that V, that's a power move up. Well, this was a power move down and then was bought again around the $50 area. And this could either continue higher or it could retrace again and see if it tests 50 there. So that's all I want to show you guys on that chart. But that can be an emotional ride where you think you bought a quality company, Dow's a big company, my money should be safe there, and then it's kind of down over the last year. So that can be very discouraging to someone that buys individual stocks. But I just threw some questions in here for you guys to think about. What emotions or patterns do you see in this 1-year daily chart? What does this reverse head and shoulders pattern communicate down here? And then what does this head and shoulders pattern at the top communicate after earnings and after a dividend? And again, what does the power move down and the V bottom communicate? Well, that was very strong selling pressure. And, this sell-off after earnings and a dividend is kind of suspect to me. Like somebody wanted to wait until the dividend was paid off and then just get out of the stock. Maybe a big institution or something wanted to just get out of it. So that's possible, And we do have a volume spike right here too. So that stock looked good, and now it doesn't look so good. So let's get on to maybe a little bit of homework for you guys to start getting you to think about different time frames and different emotions about what's being communicated to you through price. So this is just a monthly chart, 5-year monthly chart of Uber. So most people would recognize that name. E on the chart is just earnings. And then you can see the different range or different size of these bars. So think about it. These range expansion bars, like this red bar with the bottoming tail, what does that communicate to you? And just think about, where did it open? It opened here, it closed here, but it had this huge range and then was left a bottoming tail. So that's kind of one area that's kind of sticks out to me. This is where Uber went public. So it had an opening price, a range, and then a closing price at the bottom of that red bar. And then we had kind of this large green igniting bar, right? That's another range expansion bar, not on big volume, opened here and closed all the way towards the top. And then it kind of price moved up. We had topping tail bars, topping tail bars. So 5 months in a row, we definitely had some selling in there and buying. Again, then we have this range expansion bar going down. Even though it left a bottoming tail, that is still a range expansion bar. And since this time in 2021, this stock has really kind of sold off until recently around here in August 22, which is interesting because the market, being in a bear market in 22, Uber actually kind of went up, right? So that's kind of interesting to me there on this monthly chart. It's definitely not the strongest stock, but it seems to have some resilience, at least in the marketplace. Even though price here 5 years later is lower than the initial public offering. So Uber has, I would say, at least some positive price action going forward. It's definitely not a clean chart. We're getting a lot of tails on both sides there, some topping tails here, but price has moved up since last summer. So that could be a positive on this monthly chart. So you guys, this is just some homework. Look at Uber over the next month. And let's just see what happens. So you can go either way. You can start with a daily chart and go up to a weekly chart or a monthly chart or any other time frame you choose. But I just chose for this study to start with the monthly chart. Okay? And I think you can kind of see that maybe we are in a late stage 1, early stage 2 uptrend since August. Not a very strong one, but kind of up there over the last 9 months. So let's go down in time frame to the weekly chart. So now on this weekly chart over a 2-year period, we are down in price, looking left to right on the chart, right? But recently, again, here's summer of 22, we had this range expansion bar on volume during earnings. Now I discount volume a little bit on these earnings because you will have increased volume during earnings. And you can see that here. Here's earnings, a little bit of increase in volume, earnings, increase in volume, earnings, increase in volume. So I do sometimes discount that unless price tells me it was a valid move. And that was a valid move, and then it sold off after earnings. And then this earnings came off and kind of sold off again. And then recently, price moved up into earnings, right? And then kind of sold off again. Now we've got this kind of consolidation right here in this area, which looks negative after this big red bar. It could go lower. So right now, for me, this would be just a wait and see. If we got a nice green bar here, large green bar, I would consider buying Uber here. It'd be a fairly safe area to buy it, but that is what's showing up on the weekly chart. And you can see this bottoming area, price increase, went sideways, price increase, and now it's kind of going sideways. And so this isn't the worst area to buy Uber. My understanding is that they're profitable now, getting profitable. And so if you like the service, let's just keep an eye on it over the next month. We're going to review these charts next month and just see what happened, So my forecast would be at this time sideways to possibly prices moving up again. And then on the daily chart over the last year, things get a little more confusing, which is why I like using the higher time frames first. So if you just look at the year, if you look at price where it closed here, it's almost the same. So if you bought and held Uber over last year, you're at break even to a slight loss. Again, this large in this nearest time frame, if if we look at this, we've got a high point, a lower high, a lower high, another lower high, and now it looks like another lower high. So this isn't a near-term downtrend with a potential triple bottom. So this is one that could go either way. It could continue to sell off in this downtrend. It could stabilize here and then start to move back up. That's why I said this is kind of a wait and see, but it's also not, you know, I wouldn't call it a safe place to buy, but it's definitely safer to buy than it was back here where you had this real strong power move. This is more of a, I wouldn't call this a power move, but more of a consolidation. And you also have to consider the recent banking issues that could possibly affect Uber. That may be affecting the price not only of this stock, but any stocks right now because credit and money has gotten more expensive. That's the bottom line. So if Uber's operating on debt, well, that could affect their future performance. So that's it for that. Again, this is just something we can study together and take a look at it. See, could Uber be a good investment or maybe not? So next month, we'll look again at Uber together and see what happened with price over that period of time. So just try to look at charts over the next month and make some assumptions. Were your assumptions right or wrong? Was there a surprise move in price over, the upcoming month? What news events affected the price? Is price moving up, down, or sideways? Did any fundamental events like earnings affect the price action? What are the growth or profitability expectations for Uber? And finally, what do you think of the company as a consumer? Have you tried their service? What do you think of their service? So, anyway, good luck. Let's continue to learn together. I decided to change it up a little bit this month instead of giving you guys, like homework, like go research 10 or 20 stocks. I decided to choose the stock for you and for us. So let's just keep an eye on Uber and see what happens. And maybe we can learn something from that in reading the emotions of these charts and price action. So I hope that helps you guys. Again, thanks for watching The Laptop Trader. Please share, like, comment, and subscribe. And we will see you again in May of 2023. Happy Easter again, guys. Bye.